investors are digesting some of those key numbers that we got this morning. I'm talking about the revision in GDP came in pretty much bang on with estimates, and also the S&P Case-Shiller coming in slightly below expectations. For more on how the markets could react to this, we've got Hugh Johnson. He's with us, and he is chairman of Johnson Illington Advisors, joining us from his offices in Albany. Hugh, good to have you back on our program.
Nice to be with you. Okay,
now you are actually looking possibly for a correction in this market.
Yeah, within the context of an ongoing bull market, you know, as I crunch the numbers, as I look at what lies ahead for both the economy and profits on the one hand, and interest rates, which I think will be rising on the other hand, you put it all together statistically, and it says to me that we're about 8 to 10% overvalued. So, you know, that we might have a correction or a pullback of 8 to 10%.
Right, but the interest rate scenario sounds like a next year story.
Well, it is a next year story, but you know what happens, of course, is investors are not thinking so much about where we are now, but thinking about what's going to happen or unfold in 2010. When you price the markets, you price the markets based on what you think lies ahead in 2010, and that's not just for profits, that's obviously for interest rates as well, which will affect price-earnings ratios.
Hugh, talk to us about sectors. Betty mentioned that telecoms are finding some buyers, some of the consumer staples, some of the healthcare names. What's your sector play right now?
Well, that's short-term stuff, and that, I think, reflects the nervousness about valuation. You know, you don't buy consumer staples, you don't buy healthcare, utilities, and telecom unless you think we're in for a bear market. Those are bear market sectors, and so I think it reflects the concerns about valuation and the possibility of a correction in prices. When we get to the other side, when we get to a level that makes a lot more sense, it's not going to be those sectors that are going to lead. It's going to be back to materials, cyclicals, industrials, and technology.
Which we saw some of that. I mean, you buy financials, Hugh?
You know, I have a lot of trouble buying financials. First of all, I don't have positive relative performance numbers from them right now on a short-term basis. Secondly, I think there's still too many risks ahead, or too many potholes, shall we say. So financials I'm underweighting only because the level of risk is a little bit high for me. I'd rather stick with cyclicals and technology on a longer-term basis.
Hey, Hugh, it's Adam. Great to see you. With the VIX down at 52-week lows, do you buy some puts here? That way you can kind of stay in. I know you're a long-term guy. Does that allow you to build up a cushion insurance policy? Yeah,
I think if you're an aggressive investor, if you're an active everyday investor, you can buy some insurance on the market, a la the 8 to 10% correction that I'm talking about. I think it's important to keep in mind that if you're that kind of a trader, that's always fine, but you have to recognize that calling short-term swings in the market by me or anybody else is nearly impossible.
Hugh, I mean, John was talking about volume earlier. Are you surprised that we have pretty much had low volume through this market rally?
It was pretty high when you look back at the spring and the early summer, and it's tapered off. And I think it's tapered off, and that, again, is a reflection of the fact that a lot of investors are starting to dig their heels in, and they're digging their heels in because when you take a look at the consensus forecast for both the economy and profits for 2010, you say to yourself, look, valuation is starting to become a concern. So I think the fact that we saw that sector performance, as Adam pointed out, and we see lower volume, we see the VIX doing what it's doing, is all a reflection of that overall concern about valuation.
Okay, all right, Hugh, good to talk with you as always. Always have strong opinions about the markets. Hugh Johnson of Johnson Illington Advisors there in Albany, New York.